All right, we're good to go here. So I wanted to start going over some of my setups that I've had. Let me see if I can find some of the other ones that I already removed off my watch list. And then I was going to ask you guys some of your setups that you're looking at for next week. Because I do have a few that I have pending at the moment. Let me look at my journal actually. AUDCAD and NZDCAD. Those are the two that I actually have. Where's NZDCAD? Right here. Yeah. So let me put these up top. And then I think that's all. The USD Chef I still have up here already. All right. I think that is all that I had. So the first one I'll go over today is USD Chef, because that was my most recent trade that concluded, and it was just a fairly simple break even. For me here, well, first off, super self-explanatory, just following that bullish trend kind of that we have in the higher time frame. We had a very clear sweep on liquidity here of a nice low, nice and impulsive too. You guys know I like to see those heavy bearish candles before a strong bullish break of structure. We had the fair value gap right around the entry level, so this was like a picture perfect setup for me. Tap me in, went to my break even here, but I actually with my trade assistant didn't get taken out here for whatever reason. I think my PC was off at the time, or I was out for the day, so I didn't get triggered break even here. So price actually did come and bring me into a little bit more drawdown. And then the second break even here is where my assistant ended up updating my stop loss. So this is where I actually got tagged out on MT4. But still a break even regardless. I just kind of got lucky in the aspect that it hit break even 2 times and then managed to tag me out. Did manage it a little odd, to be honest. In most cases, if I saw that it didn't trigger me, I would manually close. But the issue was when I hopped on for the day, which is usually around like 8 a.m. my time, it happened to be that price was right down in this general area. So I'm not going to just close out at negative. I decided to just hold it and let it either stop loss TP or once again break even. And I ended up getting a little lucky there with the second break even. And then NZD-CAD, very similar to AUD-CAD, almost identical setups here. We had just overall bearish market trend. And then we had these relative equal highs in here. Price reaches above them, grabs that liquidity, then breaks structure. We have a large fair value gap right around entry, and then price worked its way up, tagged me in here, and then very, very quickly stop loss on that one. And then same thing with AUD-CAD, almost an identical setup. This is actually a setup that I'm looking at now, but I will redraw my original. So I had from this range high to this range low, simply because we had a very significant high put into place here. We sweep that high, we broke structure very aggressively to the downside here. And then once again, we have a fair value gap right around that entry level. So this one tapped me in, consolidated for about a day inside of that general area, and then one good candle again, pushed through stop loss there. So that was another negative 2% for me. So I actually ended up, I mentioned to you guys in last webinar, I'm probably going to switch back to 2%. I started doing that as of these trades that we're going over now. So my initial trades for the year were 1.5% risk. Honestly, partially because the values were a little bit uneven and out of my, I was mainly getting confused. I used 2% for the whole year of 2024. So trying to drop it to 1.5 just didn't mathematically, I'd be looking at trades and kind of off in my head with the P&L and stuff, just a little confusing. So I went back to 2. I think if I do end up dropping risk, it'll end up being to 1% at some point. Simply just because my account is growing and scaling, and I'd prefer to just be at comfortable 1% risk rather than continuing with 2%. But for now, or for the foreseeable future, I'm going to stick with 2%. So I did take a -2 on AUD-CAD and a -2 on that NZD-CAD we just went over. An absolute ton of break evens this year for me, and I know everybody else has kind of the same thing going on. NZD-JPY, we'll take a look at that one. So another break even. Let me just clear this up actually before I move on, because I do have a current trade on AUD-CAD. We'll go over current trades in a minute. I want to start with kind of my recent orders. So this one pretty self-explanatory as well. Um, we had a grab on that liquidity high, very aggressive and impulsive move. Then we broke structure down. I will say here, I originally wasn't going to take this due to how weak of a break was. I took it anyways, slapped it on, and got the break even here because we got a good reaction out of it. But another reason why I was kind of not really interested in this one was this disgusting range here. I really try to avoid these the best I can because I find there's more losses within them than winners, just based on historical data. But is there any trades that you guys have? Let me make sure I don't have any questions. Is there any trades that you guys have that you want me to look over, whether pending or ones that you may have took in this general time period that you want me to go over? Because those are going to be my concluded trades that I've taken, my more recent ones. And then for pending, I do have, actually, I did just get tapped into pound US dollar. It looks fairly aggressively bullish at the moment, so we'll see how that plays out. If it does take that high, I'm assuming we're just, likely to shift on a higher time frame perspective. A pretty good example is when you see significant lows or highs in the market like this, it's fairly common that once a significant area is purged, you'll see price tend to reverse in the other direction. You kind of saw a similar scenario here. You get a very strong liquidity point high, price grabs that, and then we revert to grab another liquidity point. And then more likely than not, after taking that, you may see price come and target a high, for example. It's just fairly common with your higher time frame swings because there's so much liquidity above points like this. Price grabs it and reverses. Tons of liquidity below points like this or like this. And on those higher time frames, the higher time frame you go, the more liquidity and orders rest below these areas. So you'll typically see once they do get purged, price fairly quickly reverses in the other direction. So that's kind of my expectation on pound USD here. If it does come and take this high, a little bit more of a bullish perspective on the higher time frame. See how that goes. So I do think I have other pendings. Not sure why they're not here. Trying to think. Oh, USD JPY was another one. I had this high to this low here, with this high in place like so, and then a break of structure down. So this is kind of what I was looking at on USD JPY from this high to this low. We'll see how that goes. If this does come and make a new low here, I'm no longer interested, especially because price has been sitting in this range for like a few weeks now, and it's not something I really care to sit and wait out. And then I don't know if I had any more. There was a lot of low volume overall, like this type of stuff, and when this happens, I just completely try to avoid it as much as possible. Especially because we had inauguration this week. We had Martin Luther King Day here in the U.S., so double holiday lined up on Monday. So it is fairly often you'll see some shitty volume during holidays. I don't see too much else. Yeah, like stuff like this. I'm really gonna avoid these pairs for a little while until I see some volume back in the markets. Euro US dollar. I saw some people with this one here, this high to this low. It's not a bad trade either. You expect price to retrace there. Once again, not touching that. Don't see too much else. I wouldn't mind a setup like this. Stop loss at the high, or stop loss at the low, TP at the high. I don't see too much else going on. I do have AUD USD. I haven't set this one yet. I do have AUD CAD pending, which is my more recent one. Basically the same idea there as AUD USD. Not too much else on other pairs that I was seeing. Chef JPY actually looks pretty similar to my NZD JPY one that I had. Add Chef. Yeah, not too much going on, realistically, at least from my point of view here. Like, I really try to avoid this type of stuff. It doesn't help anybody trying to get entries into price action like that. Let's see here. So pound USD in pound CAD. Yeah, so that was a pound CAD. We'll take a look at that. AUD and NZD CAD. Do you always check? I don't check the higher time frame always. I check it mainly from like an analysis standpoint, whether strengthening or I don't know what to call it, not confluence, but just kind of looking at it from an analytical standpoint, just to get an idea of where I am on a chart and like higher time frame. But I don't use it for any type of trade selection. Like if my higher time frame is bearish, but I do have a bullish setup, I'm gonna take the bullish setup regardless because it follows my plan. But it's more of something to just strengthen or add as a confluence, but I don't use it as a strict rule for the trading plan. So like I said, even though I do expect pound USD to be fairly bullish because we just purged such a higher time frame low, it doesn't mean that I'm gonna sit out of that trade. I'm still willing to take the risk on this trade regardless of my higher time frame perspective. Pound CAD was another one I saw. As some of you might know, I take from my high to my low. If this 50% is below that break of structure, I typically avoid those ones just because I feel my range might be a little bit overextended in those cases. And pound CAD, you can see there's definitely a much bigger difference here from that range compared to pound USD, where in my opinion, I was like, yeah, close enough, I'll take it. So that's kind of my difference there. I think both of them are great trades, though, regardless. I don't think that rule is something that everybody has to follow. I mainly do it from the perspective of not having overextended ranges and in some cases forgetting about them. Because if I do let a trade just run on and continue to move on and on and on like this, I'll sometimes forget orders if they've been sitting pending for too long. So I do not have pound CAD, but I do think that's a great trade as well. Is there any other ones? I know someone mentioned, I think was it NZD CAD? Let's see. Yeah, NZD CAD and AUD CAD. So those two, I'm assuming, let me delete my markups here. For NZD CAD, it's something along these lines, which is very similar to my AUD CAD trade that I have here. Almost identical. So we'll mark out all the pieces here. We have the low, we have your current high, break of structure, your fib is already on there, and then sweep on liquidity. So, and then your entry right around that level where the fair value gap is. It's a nice setup here. Let's mark that out. We'll see how some of these do. Like I said, higher time frames, sometimes when I look at it, very, very heavy momentum starting to come into the markets here on a lot of these different pairs. You know, very, very bullish on NZD CAD and AUD CAD. Do I expect a retracement? I think it's unlikely. You know, we're kind of seeing it back here as well, where these lows are being put into place and then completely dusted and left behind. So I'll keep an eye on volume, and if this continues to run and run and run, and I continue to extend my fib here, I'm gonna eventually be out of this one, and you know, delete that pending. And then USD JPY, I do have a sell order. I don't know why it got cleared off my charts. I know you guys just saw me mark it up, but from this high to this low. So I have this pending as well. That is, then I'm going to move USD Chef back. It's already concluded. And then I'll move some of my other trades back down that have concluded. So that's basically what I'm working with for the upcoming week. And I do think I wanted to go over one data review today, the one from Notion. So let's see here. I am fairly new to Notion as well. I want to make sure, are these the same? I don't know what this is. Let's see. Okay, I think they're the same document. Let's see. Yeah. Okay. So let me pull this up here. Backtesting version 2, 2024, all pairs. So how do I scroll left and right here? Is this the end of it? Maybe that's the end of it. All right, so pair break evens, pair win rate, and then BE plus win rate WR. Okay. I might need a second, or is he in the call at the moment? I was gonna say I might need a second to wrap my head around this data here and what's going on. So 18% win rate, 42. There's some variance on the pairs. I can see that. 11 trades total. So break evens 45%. So I'm assuming that's just saying like 5 out of the 11 were break even. And I'm not sure break even plus win. Okay, so this is your combined win rate this number doesn't necessarily matter here. And then this is your, what's called your realized win rate, because this is going to be your overall wins. And then 2.25 divided by 11 is about 18. Okay, so this is the column I need to really focus on. This one as well is good to know, but, and then I want to see if there's a cumulative. There is not. Oops. I want to see if I can copy. I was going to say there's no cumulative data here, so it's hard to work with. Like, I don't have an idea of his average win rate. Oh, here it is down the bottom. Perfect. So average win rate looks like 26.25, so right on the edge of profitability if you're using 3 risk to reward. However, his average with break even is 65%, just under that. This is a huge plus for those of you that are on the fence about break even. And the reason I say this is because, you know, if you have a 26.25% win rate, just a standard win rate without the break even rule, you're going to be just above profitability. You need about 25.01% for long-term profitability. And then anything over that, like 26% realistically, is right on that profitability line. However, because his win rate with the break even is allowing for 65% win rate here, it's really conserving the capital in a lot of those cases when he's not winning, which is super advantageous for his data here, because, you know, even though he's right on the edge of that profitability, you could see how consistent the equity curve is by implementing that break-even rule and how substantial the increase on his risk to reward is here. So that is very important. 270 trades here and 119 RR. So 270 trades in a year is definitely on the heavier side for sure. And then I'm assuming I can go into these and see. Yep, perfect. So that's definitely a bit heavy. Does this even add to 270? Yeah, it does. It looks okay. Looks a little shy of that, but maybe my math isn't right now. So 11.4, he's, wow. Okay, this equity curve is fantastic here. So overall, before diving into the trades, I like to just go over the data as a whole like this. So I don't build any type of bias before going into it. I will say right off the bat, this is, you know, the data looks fantastic to me. The win rate here can definitely have a slight increase. We'll go through the trades and kind of see if we can make adjustments there. But overall, 65% win rate is fantastic with the break even. So very important there. Let's start with AUD CAD. And I just want to get an idea of the, okay, so about 11 trades in the year, break even, win, risk to reward, second test, too big, too impulsive. Okay, comments are fine, and let's look at some of these trade images here. So the first thing I will mention here is the break of structure. You definitely want to focus more on those significant breaks. There was not really a candle close here, very close to, if that. And then the other aspect of this, I know a lot of you guys agree with this type of rule, but if price comes this close to my entry level, as you can see where my mouse is kind of indicating here, and then it moves, you know, this is roughly 2.5 risk to reward in profit it would have moved, and then reversed, I would be canceling my pending, because I assume that I've missed my general move here by just a few pips, and then it hits your break-even line, and I would cancel pending. I think it's going to be an improvement longer term, just focusing on that. I know a lot of people use that rule as well. Definitely a large range here. I would agree with that. He has it in his notes as well. And, you know, it is tough to kind of dictate what's considered a large range. You guys heard me at the beginning of the webinar talk about this 50% line. If it exceeds my break of structure that I'm using for the trade, I typically consider that range to be overextended. And, you know, part of overextending a range like this and continuing to draw your fib, even though your break of structure is way down here, one of the issues with that is you can see how long this retracement took, how long this pending order was sitting here. It's not ideal for positions, so I do think there's a little bit of improvement there. And then this one, he says maybe too big as well, so I'd assume it's something similar. This one is definitely similar. It's just a very, clicking the advertisements, just a very large range overall here, because realistically speaking, the break of structure you'd want to use for this range is like this very large one up here. So I would say I tend to avoid some of these huge ranges, because I find they have not only less of a win rate, but they essentially waste my time and margin by just having trades open and sitting in these very long positions. This one, luckily, he was able to get out fairly quick with stop loss. But I've had positions like this where I'm sitting and floating with P&L for weeks at a time, and I try to avoid those as much as I can now. Too impulsive. Let's see. I don't think so. I think this is a great setup. I like the sweep on liquidity here. I like how aggressive that sweep on liquidity is, and then how aggressive that break of structure is. We got a great reaction from it as well, so I think this is a solid trade. My only drawback on this one is just that consolidation. It's a little bit ugly here. There's no clear highs and no clear lows in this market. Overall, not a bad trade either. Valid L. I think I would agree here. We just see, he has his wick as his sweep. It's definitely a little bit of consolidation, but I would let that slide. There is fair value gap here, and then a break of structure to the high. So not a bad trade here either. One risk, what is that? Another break even, it looks like. Aggressive. I think this is a valid trade as well. It does depend on your zoom on the chart too. Like I noticed some of your setups, you have the charts kind of looking like this a little bit, and it is very tough to see your distinct highs and lows. You want to kind of really stretch that out and get an idea of your very clear highs and lows as the market moves. That would definitely help a little bit, just because you can see here it's tough to kind of gauge the highs and lows of the market with price action like this. If you were to stretch it out more, it would be a very clear sweep on liquidity here, and a very clear and aggressive break of structure. I think that's a good trade too. Let's see here. Valid L. Yep, looks good to me. It's actually right after that previous one we just saw. And then W. Okay, this one, god damn these ads. This one I would definitely not take. It goes back to what I said about those very long pending orders. I mean, you're setting this order in, I don't even know what month this is. 28, 19, oh, the 14. So you're setting this order in August and getting tapped in mid-September and then hitting take profit at the end of September. I think that's a bit aggressive and far too large of a range to take. So I do think overall, just based on what I'm seeing from this first set, my recommendation would be try to minimize those very large ranges that you're taking. And I think a lot of that has to do with chart zoom. If you are zoomed, like I talked about before, with your charts kind of way out like this, you're going to be tempted to see setups like this maybe and consider this a sweep and then consider this your break and kind of have trades that end up, when you stretch them out, drawn out with these very aggressive and large ranges. So I do think trying to keep a focus on the scale that you use here for your chart is important, but overall not bad trades. I just think it's kind of doing you no favors by having those extremely large ranges there. No break even win. Non-break even win. Not sure what that means. Non-break even win. So it definitely would have broke even on a live account. I'm just not sure what Oh, I see what he's saying. It broke even. He's saying that if he didn't use break even, it would have won. So he's just kind of keeping track of that. And then wait second retracement. Let's see what this one is. Not too sure what he means here, but I think this is a fine trade as well. It's very similar to the one we looked at before. So overall, these ones weren't too bad. It was mainly just the ranges, focusing on those smaller ranges. So no trend, valid break of structure. Yeah, once again, I think you really want to focus on your most recent breaks of structure. I think that would help out the most here when it comes to these large ranges is, yes, there is a break of structure here, but you can't tunnel vision into this range without realizing that, we're seeing sweeps of liquidity here, and then another break of structure here and a possible pending order for sells. And just overall focusing on your most recent break of structure in price action. So it's kind of what you see going on. Like I have a bullish trade. Oops, I deleted it. But I have this bullish trade because it is the most recent break of structure in all of price action, compared to kind of tunnel visioning in, where if I were to consider this a break of structure, and then consider this a sweep. Now I can throw a pending on here, yes, and technically it follows the rules, but you fall into that trap of those very large ranges again, so I would try to avoid that. Let's see here. This one's an L, he said. Fairly similar. This isn't a bad trade either. Just a bit of an uglier range. No liquidity, choppy break of structure. Honestly, some of these ones where he mentions certain negative aspects, I would say, are some of the cleaner ones I'm seeing here. Like, I do like the impulsiveness of this sweep, the break of structure that we see here in the range that he's using. It's a lot more close to price action. It is that most recent break of structure that we just talked about. So overall, I think that's a pretty clean setup. No liquidity, he said. Let's see here. Yeah, so these are the ones where I would definitely try to avoid. For example, I would have probably taken a winning trade as a sell here just based on this heavy wick sweep of liquidity, break of structure down from this high to this low is my most recent break of structure at that point in the market. Let me see if I can, I have like a snip tool here that I can draw. So for example, for me, I would be looking at, once again, focusing on those most recent breaks, and at that point in price action, there would be a most recent break of structure here, pending order from the high to the low, and then would have been able to capitalize on that winning trade. And then, even more recently, I see a sweep here and a break. So really focusing on your most recent breaks of structure, it seems like you kind of tunnel vision in based on the break of structure that did happen way back here. But even then, that would be your stop loss low. This would be your high in the range. You end up tunnel visioning into and forgetting all of this price action that's occurring before tapping you in, that you could capitalize on. Let's look at this one, another win here. Same kind of scenario, to be honest. It's once again where there's a break of structure that occurs, but you're ignoring all of this internal price action with breaks of structure higher and lower, which is fine in this case because I will say it consolidates and it's very choppy down here. I would avoid this overall. So I do think some of these are odd, and one of the most important things I look at when I'm reviewing data is, are the winners realistic and something that in a live market are likely to be caught? I think this would teeter on that line of being a bit unrealistic in the sense of very little liquidity sweep here, a very unclear range that we're working with, no break of structure marked up. And then, yes, there's fair value gap here, but then we're talking about a month and a half before you get tapped in. The more unrealistic that a winner is, it's far worse than taking a bad losing trade. I will say that again, if you have unrealistic winners, because winners are 3 times as important, that is worse for your backtesting data when it comes to the reality of it and comparing it to a live market than taking a few bad trades here and there in backtesting, which is only -1 and not going to hurt you. Having some unrealistic winning trades that are worth +3 to give you that profitable data, especially data that's on the edge of profitable, like we're looking at here. I do think you want to focus on clear-cut winners, kind of dialing in a little bit better on, ones that are a little more realistic. I think this is a really tough one to catch in a live market, in a bit of an unrealistic scenario. The other thing I want to mention too about this, let me just make sure I got no questions, just to double check, but his win rate should be around 40% excluding break even. 38% of 262. Okay. His 26% win rate includes break even as losses. Okay, that makes a lot more sense. That's a very odd way of looking at it. I agree. So based on the R gains and equity curve, that's an odd way of looking at it. So yeah, I do think he's just incorrectly calculating his win rate by taking break evens and counting those as losses. 68 wins, 99 break evens, and 95 losses. Yeah, so that is, what is that for win rate? Let me see here. 68, 95. Okay, so yeah, you're correct there. About 41.7% win rate based on this math here. makes way more sense too. It's definitely an odd way to calculate win rate. I'll let them know after this, kind of how to correctly calculate it, because I do think this would be incorrect by including break evens as losses, because that's not the case. You're not losing capital. But the other thing I wanted to mention for him here, if he wants to watch us back and take it for notes, and for you guys that are watching, please mark up every piece too. You guys see me, it's good practice. When you guys see me mark up trades, like we just went over, I think it was NZD USD or one of these trades, I mark up every single, I mark my high, I mark my low, I mark my sweep, my break, my fair value gap, and then throw the fib on for every single trade. It's one of those things that not only you're going to have nicer, more organized charts, but you're going to keep track way better of trades. When if you find yourself taking these odd looking setups, most times it's because, if you drew a break of structure here and tried to draw a liquidity sweep, which just isn't really present here, as you kind of do that more and more, you'll start being able to dial in a little bit better on the setups that don't necessarily look like a clear setup, which would be one like this. There's just no markings on here to kind of indicate the qualities to the plan or the checklist of the plan. So just keep that in mind. I always mark up every single piece of the plan, every single trade. It's just an easy habit to get into and something that I think is super important. Yeah, definitely an odd one here too. So I think my biggest takeaway from already what I've looked at is focusing on the most recent break of structure, because I myself had a trade on this pair right here. So yes, you see the break of structure that occurs here, but then we have higher high, higher low, higher high, higher low, or sorry, lower lows and lower highs. You get the point. Liquidity sweep here, break of structure higher, and then once that break of structure occurs, we have a candle close, a liquidity sweep. Now all of the rules to my checklist are met, fair value gap. That's when you should cancel a previous pending and then reallocate your new pending onto this range that just created the new set of rules. So you always want to focus on your most recent range that follows all the rules that your trading plan does. Because what happens is you may be setting these pending orders here and then just kind of saying, okay, the rules are set, let it ride. But then by the time price even comes to tap you in, you may have missed other setups that occurred within that range. And then you're going to have the less probable setup still sitting there pending. So definitely focus on the most recent ranges that follow your rules. And then we have a break even here, last but not least. This is definitely an odd one as well. That's an unfortunate break even too. I mean, we're a centimeter away from that high. So yeah, what you said about the 40% win rate too makes so much more sense seeing this equity curve. Yeah, because if you had a 26%, let me just see here though. He had an 18.2% win rate out of 11 trades here. And he had 1, 2, 3, 4 losers and 2 winners. So yeah, it's definitely incorrectly. It's including all of these as losses. Okay. Just keeping that in mind for the future here. Weak liquidity is what he says here, so we'll see this one. I would agree. Let me delete some of these. And then we have this one here, which looks like a break-even trade. Definitely another scenario where just kind of letting price run for far too long. I would recommend that 50% rule that I used. If you see this 50% line come above your break of structure, let it be. That trade's gone, in my opinion. That trade or range. And, that rule doesn't have to be applied for everybody, but it is something where if I see someone like this who definitely has a habit of overextending into these very large ranges, I think it's much more helpful to use a rule like that. Let's see here. Look at the winner. Winner looks solid again, but it's gonna circle back to what I've said before about that very overextended range, and also the idea of like really marking your break of structure. Because when you take a look at a range like this, and this is your break of structure that you're utilizing here, and this is your liquidity sweep. The liquidity sweep is okay here, but when you look at how small this range is comparative to the weeks, if not a month of price action that you're waiting for to accumulate and even tap you in, it's a bit disproportionate. So I think that's going to probably be my biggest takeaway. I could go through the rest of the data here in each pair. I think overall, though, the profitability here is solid. I mean, a 40% win rate is looking really good. So just that minor tweak alone, I do think could see improvement, but not necessarily even improvement on. I'm confused here now because 250 trades, 270 trades in the year, but taking such large ranges. I can't see. There's got to be pairs in here that are an outlier too. 11, 11, 14. So yeah, like 19 trades in a year. I'm going to check this pair out. Okay, so I can see where the majority of trades are coming from then if they're going to be these very small ranges here. Yeah, I definitely would avoid these types of setups. You know, you're not seeing any liquidity sweep here, any type of break of structure. Once again, like if you tried to mark a break of structure here, it would just not look significant to price action overall. Yeah, some of these aren't too bad. Some of them are definitely like this one I think is fine. I think like I took this trade. When was this? April. I don't know if it's April of this year, but I feel like I took this trade. Not a bad one either. Oops. One. Let's look at this winner here. Yeah, it's a very clean trade too. So there is definitely some clean ones mixed in here. 20 trades in a year though is fairly significant for one pair. Especially when some of these ranges before were very, very large on these other pairs, and now it seems like the further down in your backtesting you went, the more aggressive of an approach you may have taken. Yeah, compared to some of these ones with like 3 trades in a year, which can happen, but I just want to see if there's any type of distinguishable difference. Let me delete some of these. Yeah, so definitely some fairly large ranges in here. Oops. Oh, same image by accident, maybe. But regardless, I mean, the data overall looks good. I honestly will say I'm fairly surprised with the win rate based on some of these large ranges, because the number of trades is so significant as well. Let me double check one more thing. Is this all 2024? It is. Wow. So 270 trades in a year on 2024 with such large ranges. I'm fairly surprised at that result there, especially the win rate being 41%, with how large some of those ranges are. Take a look at gold and silver here too, because I don't trade these pairs personally. I'm just kind of curious how some of these setups look. Yeah, definitely some tough volume here. I do think stretching your chart like this would help visually a lot better as well. Some of these, you know, if you really stretched out this scale here, you'd be able to see much clearer highs and lows, especially on a currency pair like gold, which is known for moving so erratically. Um, let's see here, not a bad setup. Not a bad setup. Uh, yeah, I definitely would not. I think the break of structure is where the most work needs to be done here. I would review the break of structure content in the course and start there, because some of these, like, you can't consider one candle a range, because at the end of the day, that's what we attempt to trade, is trading ranges. You know, a range is when you look at a high to a low, and I mark it out with my dots here. This is what a range is considered, and I do think without utilizing a proper break of structure, it's going to be really tough to consider something like this a range. Oops, someone we just looked at. Let me look at the winner here. Yeah, see, another tough one where I don't think I would consider this a trading range. You know, it's tough to say because looking at some data here, just want to make sure I got no questions. Looking at some data here that does have profitable results, but also something that, doesn't quite utilize fundamentals properly, it's tough to, give advice on it, because if something's at a 40 something percent win rate over the course of 270 trades, it's definitely something that I wouldn't knock. 41 trades, 270 trades, 41% win rate. You're going to make some significant profit there. But it is, when you're seeing someone lack some fundamentals of structure and stuff, I would say it's tougher to give guidance on. Because obviously, in most cases, if I see profitable data, I'm going to tell you it's okay to remain doing what you're doing. But I'm worried a little bit on the sustainability side here, because I'm seeing, lacks of understanding of breaker structure and stuff. So I want to make sure it's something that can be sustained, and there's some realistic winners in here as well. I also think I would recommend FX Replay. I think that would be one of my bigger takeaways here is, instead of TradingView backtesting, which I've found in the past can, it's not as clear of results for traders. I think utilizing the FX Replay is probably one of your better goals here, and it will show you, maybe a little bit more of a truer win rate when you're in that live market kind of mindset, seeing price develop as you go. So that'll probably be my big recommendation. I'm gonna just write this down in the channel after, or he can watch the recording back if he would like as well. But my main takeaways are gonna be focusing on those ranges, maybe utilizing that 50% rule I talked about, where if the 50% of the range exceeds beyond the break of structure, focusing on deleting that order in more recent price action, your most recent breaks of structure. And number two, I think fundamentally, structure is something that could have some improvement here, not considering like a single candle break of structure a range, because that is very important. We need to be utilizing ranges as we're trading. And then the next one I would say is utilize FX Replay, because I do think FX Replay is going to give you a little bit more clear of a understanding of your data and your edge, and it's going to force you to kind of practice in a little bit more of a live market environment, compared to any type of maybe hindsight scenarios and in TradingView and whatnot. So overall, the data is not bad. I like the win rate here, knowing that it's 41%. The data looks fantastic, the equity curve here, and especially the repetitions and number of trades. But other than that, I think those would be my key takeaways here. So I will write that in the server after the webinar. I'll just kind of go in here and fill that in. Is there any questions you guys have before I wrap it up here? Anything else you want me to go over? What time is it? It might be a little early today, but it's all right. This is able to see the original messages, maybe not. All right, well, if there's no other questions, then I might wrap it up here, and I will have this posted usually within 5 minutes. So I'll have it uploaded and posted. Let me double check. Okay, just making sure the recording was still going. I would have. Yep, no problem, guys. All right, so if that's gonna be all, then any questions come up, obviously just message me in chat after the webinar, and I can get to them. But thank you all for tuning in. I'll see you guys in next week's webinar, and have a good weekend, everybody. Thank you.